Breaking from the epicenter of American economic power, President Donald Trump is locked in a fierce, history-making battle to remove Federal Reserve Governor Lisa Cook, with the Supreme Court now poised to decide whether this unprecedented firing stands or crumbles. What began as allegations of mortgage irregularities has escalated into a full-scale constitutional confrontation, complete with lower court injunctions, emergency appeals, and now oral arguments before the highest court in the land, set for this very week. This isn't merely about one governor. It's a direct assault on the independence of the world's most influential central bank, unmasking risks that could politicize interest rates, destabilize markets, and erode the safeguards that have protected U.S. monetary policy from executive whims for over a century. We examine how this feud reveals deeper fractures in governance, party loyalties, and the balance between elected authority and institutional autonomy. As Trump pushes boundaries in his second term, the stakes couldn't be higher. Financial stability, global confidence in the dollar, and the very principle that the Fed serves data and the long-term public interest, not presidential preferences. Stay with us as we trace the timeline, dissect the legal battles, and probe what this means for America's future. Main analysis. The Federal Reserve's independence is no accident of history. It's a deliberate design forged in the wake of banking panics to insulate monetary decisions from short-term political pressures. The Federal Reserve Act of 1913 established a board of governors with staggered 14-year terms, removable only for cause, a high bar meant to prevent presidents from firing officials over policy disagreements. For 112 years, no president dared test this limit by attempting to oust a sitting governor, until now. Nobody expected this line to be crossed so brazenly, but Trump's move against Lisa Cook has thrust the nation into uncharted territory, forcing courts, Congress, and the public to confront whether the executive can bend one of the last truly independent pillars of government. Lisa Cook, nominated by President Biden in 2021 and confirmed in 2022, became the first black woman on the Fed board. An economist with degrees from Spelman, Oxford, and Berkeley, her expertise focused on innovation, economic disparities, and growth. She served amid post-pandemic recovery, voting in line with the Fed's consensus on combating inflation through measured rate hikes before supporting cuts as conditions eased. But in the summer of 2025, shortly after Trump's inauguration, allegations surfaced that would change everything. Reports, amplified by administration allies, claimed Cook committed mortgage fraud by listing two properties, one in D.C. and one in Michigan, as her primary residence to secure better loan terms. A referral from the Federal Housing Finance Agency director highlighted discrepancies in her applications and disclosures. Trump seized on this, issuing a letter on August 25, 2025, removing her for cause under the Federal Reserve Act, citing inefficiency or neglect tied to the alleged misconduct. This marked the first time in Fed history a president fired a governor outright. Cook responded swiftly and forcefully. Denying wrongdoing, she called the claims baseless and politically motivated, administrative oversights at worst, not fraud. No charges had been filed, no formal investigation concluded. She filed suit in D.C. federal court against Trump, the Fed board, and Chair Jerome Powell, seeking an injunction. On September 9, 2025, Judge Gia Cobb granted it, ruling Cook showed a strong likelihood of success. The for cause standard demands more than unproven allegations or pre-appointment conduct, and allowing removal without due process threatened the Fed's statutory protections. The administration appealed, but the D.C. Circuit upheld the injunction on September 15, stressing judicial oversight and executive removals. Trump then escalated to the Supreme Court, filing an emergency stay application on September 18. In a rare move, the court declined immediate intervention on October 1, 2025, but scheduled full oral arguments for January 21, 2026, meaning Cook remains on the board as the case proceeds. This delay preserved the status quo, allowing her to vote on rate decisions, including recent cuts that aligned with easing pressures but defied direct White House demands for sharper reductions. Tensions boil over further with parallel developments. The Justice Department launched a criminal probe into Chair Jerome Powell himself, centering on his congressional testimony about the Fed's headquarters renovation, costs ballooning from $1.9 billion to $2.5 billion amid inflation and unforeseen issues like asbestos. Powell called it a threat tied to policy independence, not misconduct. Trump has publicly mused about firing Powell, though he recently said it's too early to decide. Even as his term as chair ends in May 2026, he could stay as governor until 2028. This dual assault, Cook's removal and Powell's investigation, unmasks a pattern: pressure on the Fed to align with administration priorities, particularly lower rates to fuel growth. From a George Will perspective, this episode exposes the perils of unchecked executive ambition clashing with constitutional design. The president, elected to execute laws faithfully, now tests whether he can redefine cause as whatever suits political ends. Defenders argue accountability demands removal of those seen as ethically compromised or inefficient. Yet critics, including many economists and former Fed officials, warn this sets a dangerous precedent. Future presidents could purge dissenters, turning monetary policy into a political tool. Imagine rate cuts timed for elections or hikes to punish opponents, boom-bust cycles harming everyday Americans. Internal GOP tensions simmer. Hardline loyalists hail Trump's boldness against unelected bureaucrats, but fiscal conservatives and institutionalists worry about market backlash and long-term instability. The silence from some Senate Republicans says everything. They fear alienating the base while preserving norms. Democrats decry authoritarian overreach, yet their past pushes for progressive Fed policies reveal selective outrage. This bipartisan hypocrisy highlights how power egos transcend party lines when institutions stand in the way. Economically, fallout looms large. Markets dipped after the firing announcement, with bond yields spiking on fears of politicized policy. A Trump victory could tip the 7-member board toward his appointees, influencing rates, bank regulation, even crypto oversight. Global allies watch anxiously. A less independent Fed might amplify U.S. tariff threats or currency moves, straining NATO ties and trade pacts already tested by America First doctrine. Legal nuances demand scrutiny. The administration cites precedents like Myers v. United States for broad removal powers, but Cook's team invokes Humphrey's executor in recent cases preserving, for cause, for multi-member agencies. The Supreme Court's May 2025 ruling carved out the Fed as uniquely structured with a distinct historical tradition, suggesting higher protections. Oral arguments this week will probe: does cause require malfeasance, or can unproven allegations suffice? Does the president deserve deference, or must courts demand evidence? The mortgage claims against Cook, while potentially serious, appear selectively applied. Why her? Amid policy clashes, defenders see pretext for retaliation against votes on rates or diversity initiatives. Powell's attendance at arguments signals Fed resolve. Adding layers, amicus briefs from economists warn of eroded credibility, chilling expertise in government. Foreign policy intersections emerge. Trump's Fed push coincides with tariff escalations and alliance strains. A compromised Fed could undermine dollar confidence, inviting rivals to challenge U.S. hegemony. Free speech angles surface too. Cook and Powell's public defenses draw attacks, questioning protections for officials dissenting from executive views. GOP fractures deepen. While the base cheers disruption, establishment figures quietly fret over volatility. Potential 2028 contenders hedge, balancing loyalty with principle, echoing past Trump-era riffs. If the court rules narrowly for Cook, it fortifies independence. A broad win for Trump opens floodgates across agencies. As arguments unfold, justices' questions will reveal inclinations. Chief Justice Roberts may prioritize institutions, conservatives like Kavanaugh might favor executive authority. The drama underscores fragile balances in our republic. This Federal Reserve feud transcends personalities. It's a referendum on whether independent institutions can endure in an era of populist pressure. If executive overreach prevails unchecked, we risk eroding checks and balances, inviting economic turbulence and partisan betrayals that harm all Americans. Yet exposing these dynamics offers a path forward. Vigilance preserves the republic. Comment below. Until next time, stay informed, stay skeptical. The masks are slipping, one revelation at a time. Thank you for watching.